Assalamualaikum and hi everyone, especially to my beloved lecturer Dr. HAZIMAH binti Yaakob and Ms. Othman. Today, I, HAZIMAH binti Harun, would like to present about the impact on the banking sector during COVID-19 pandemic. Let's start. The COVID-19 pandemic triggered an unprecedented human and health crisis. An economic downturn was caused by the steps required that contain the virus. Bank sectors has faced many challenges and has created great results for banks. The pandemic crisis of COVID-19 will also test banks operating digital transformation initiatives as digital interaction become the primary choice for customers. For this purpose, social media can be widely used as YouTube, Facebook, Instagram, and Twitter to reach their customers and interact effectively with their clients. The banking sectors needs to comply with standard operating procedures (SOP) by operating with restricted counter services and reducing operating hours. Bank Negara Malaysia (BNM) also lowered the interest rate due to these unexpected problems which affected the interest income of the banks. As a result, banks will lose deposit as it is not attractive for people to deposit their money in bank savings account at a low interest rate. The banking sector is an industry and a section of the economy devoted to the holding of financial assets for others and investing those financial assets. COVID-19 has impacted the global health that causing major structural change. The virus is extremely contagious and has led to the deaths of several thousand people around the world. Still, it also affected financial operations, with bank valuations dropping in all countries around the world. COVID-19 has created significant instability and high volatility in global capital markets. Many banking employees had to work from home during the pandemic as financial advice services. In terms of the degree to which investors have distinguished their pre-pandemic features across banks, policy interventions have also marked a turning point. During the initial period from mid-February to mid-March, the sell-off was strong and very indiscriminate, although Chinese banks remained relatively unscathed, and the risky bank experienced the largest increase in CDS spreads. In the stabilization space, which from mid-March, the distinction was more pronounced as profitability and balance sheet strength were especially good indications of development in bank stock prices. CDS spreads and the rating outlook reflected in capitalization and stable funding and credits. The value that markets attach to healthy balance sheets is likely to increase in an environment which sees a further deterioration of the financial health of borrowers. Bank Negara Malaysia (BNM) has aggressively lowered the interest rate due to this unforeseen issue, resulting in the interest income of the bank being affected. Lowering interest rates can be beneficial for borrowers, but when it comes to the banks, it is the other way around. If the interest rate is low, banks may lose deposit because it is not attractive for people to deposit their money in bank savings accounts at a low interest rate. In addition, BNM also announced that all individual and small and medium-sized enterprise (SMEs) borrowers who meet the requirements to reduce their loan payment burden during this tough period will receive automatic loan deferment for 6 months. Banks may have a high chance of suffering from credit risk or counterparty risk and liquidity issues because borrowers are required to repay the interest rate or principal of the loan on a specific date negotiated earlier than MCO. This allows banks to run out of funds in order to pay for the expenses. These two problems could lead to a decrease in the revenue and profitability of banks during the outbreak of COVID-19. During the lockdown, some banks also provide personal loan application through online. By doing so, banks are able to help enrich the customers who are severely affected by COVID-19 pandemic. Banks also make it more convenient to apply loan procedures because consumers do not need to risk their health to go to physical bank branch. Banks that provide online loan services are RHB Bank, HSBC Bank, Standard Chartered Bank and Alliance Bank. Banks can easily sell their goods or provide services to their customers during this MCO, and customers can, without any doubt, apply personal loans from various banks. As conclusion, COVID-19 is supposed to have a significant effect on the stabilization of global economic growth. A key focus also must be on upscaling and retraining the workforce for a new economy, as well as accelerating the digital agenda and bridging the digital divide. During this pandemic, hackers may break into the banking system in order to get information of customers. However, customers should aware of the customers to obtain customers' encrypted data like personal identifiable information and other banking details. This is the major impact on the banking sector to protect their customers' information and stop the cybercrime during this pandemic. Okay, for the last sections, which is recommendations, the jurisdictions have taken a wide variety of steps to help pandemic individuals and businesses, such as government-funded loans, public warranty programs, and a temporary moratorium on payments. At the same time, banks are reforming credit for businesses and individuals badly impacted by the crisis with borrowers' concerns. Supervisors should allow banks to restructure credit prudently to preserve the credit flow to the economy. The supervisors have to specifically demonstrate in this sense how these support measures must be handled